The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. And another excellent day out here in Traderland when we look at the markets up slightly. But what are we up? Almost 6 points. 1870.65, which is up 5.8. But that's not the whole story. Normally we come in and start the show off with something like 2 billion shares, maybe on a quiet day, 1.9 billion shares. How about under 1.6 billion shares today? Extremely, extremely quiet. And I guess we're probably waiting for earnings. But so far we've had 17% of the S&P actually come out with earnings. This week, we will have an additional 30%. So this is going to be the single biggest week of S&P 500 earnings. Most of them have been fairly disappointing. And I can't imagine that there's going to be a whole lot of difference between the end of the week. But everybody on the cable financial infotainment shows are saying that we must be buying here. We must. And there are a few people buying. There's just not a whole lot of them. And maybe the end of a little squeeze. Of course, today is the probably the first 2 days of option rollover. And if we pop up today, it's not uncommon to pull back a little bit tomorrow and then actually see the true market direction come out pretty much on Wednesday. But we will be looking at that later in the show. And as always, we like to start off a little histoire. This day in 1982, future contracts on the S&P 500 index become available for the first time as they open for trading in the pits of the Chicago Merc. Now arbitrageurs and index fund managers can either buy the underlying stocks in the index or a futures contract, which is cheaper. Program traders can also bet on the futures. And, of course, we talk a lot about, or everybody seems to talk a lot about the flash crash and high-frequency traders. But computer trading and its pitfalls have been around pretty much since the advent of computerized trading. And we see that in the 1987 October crash, which was all about computers and computers failing, and not any big fingers or blame to point around other than the fact that the computer systems had no idea what they were getting into. Anyway, you can always give me a call at 877-927-6648, 877-927-6648, or you can email me at path@tfnn.com, or you can put a message in the den. And we'll do something with that. Anyway, other things. On Friday, we had a call about the ETN's exchange-traded notes. I was going to go back and did go back and find out if anything had substantially changed since the TVIX disaster of, a year and a half ago or 2 years ago, whatever it was now. And I thought I would bring this up just in case we have new traders out here, and that is that there isn't really anything new in the way these things are organized. So I would say that you have to stay out of them. I want to thank the caller that called just so I could check to make sure if anything had changed. Nothing really changed. When you buy an ETN, you aren't investing in a fund. You're buying an unsecured debt obligation. So basically, you're buying the same thing that blew up the market in 2007 and 8, a CDO. In effect, a promise to deliver a return, no FDIC protection, no, nothing, nada, not anything. These are easy ways to lose all of your money, and I would have to say that you want to stay out of them. You have to basically believe that the sponsor will cover these debts. And most of these sponsors actually make sub-corporations so that if they do want to walk away from these, they can. Many of these have already blown up, including the most spectacular TVIX a while ago. ETNs also can calculate their expenses differently and levy more charges and then bury that information in pricing supplements to the prospectus. So not only do you have to go through the prospectus, but you have to go through everything else that those folks have. So just keep an eye on it. But it's pretty much what you would think it would be. But ETNs, bad news. Probably the worst of all worlds. You have no idea what's in them, and you have no right to know what's in them and what's backing them. And stay away. It is a mad market. And we're going to get to some of the things going on. AMD did come out with earnings this morning, and I think they beat by 2 cents, but not a whole lot to this. They made a lot of hay about not going after the tablet market or anything else. They're going to stick to their knitting, but of course they don't have any cash to go after anything else. Intel is pretty much flooding the market on those cheap tablets right now with components. Not offering AMD, if they would choose to get into a market where they could actually make money anyway. So we're looking at AMD, we're looking at some of these other stocks, and just thinking, what's going to happen? Well, it's going to be tough to see AMD getting out of this hole that they're in without spending on R&D. And when I looked through the books this morning, looks like pretty much what they're doing is cutting everything to the bone. So the question is just how long will AMD be around before, one, someone buys them out, which may not be a bad idea for somebody like Apple with tons of cash to get these guys on 10 cents on the dollar. Maybe this thing gets down to $2 or something one day, and Apple decides to step in and buy a company and buy all their patents, that kind of stuff. I don't think that there's a lot left out here, unless maybe they've been working on something that's going to come out real soon. But just nothing there, at least on the high end. Intel's making 65% margins. AMD, less than half. And that's not enough money to keep pouring things back into new and better products. So not a whole lot into that one. Let's see what else we have out here. Wanted to look at some other stocks. Oh, I did want to get into some futures out here and relative performance. Not a whole, the market's been kind of 5 points, not a big deal going on here. But what we do see is just how hard a lot of these commodities have been hit this morning, and how that's affected the emerging markets. They are probably about the weakest of the world markets out there. And probably, interestingly enough, palladium off 3.5%. Last time I looked, let me update this just to make sure. I think that's right. Yeah, palladium off 3.5%, wheat off 3.4%, and I think that there was kind of a premium, including oil going into the weekend in energy, and that energy really hasn't burned off too far. What do we have for crude out here? Let me see. Let me move this up here. 104.21 off 9 cents. Very interesting to see that we didn't get a real move when nothing really happened big over in Russia. I was kind of banking on a little bit of war going off and seeing crude go higher. Of course, the whole energy sector is about 30% of the S&P, or correlated 30% to the price moves of the S&P. So if we were to see a huge move down in energy, we probably see the S&P move down. And for the most part, what is holding up the S&P are these energy prices. That we're starting to see at least some of the other commodities really being hit today probably tells you a lot more about what I think is going to happen in the next few days. But just a thought out there to take a look at some of these things. But I digress. And again, that's it. I think you probably, old Z in the Den, knew all about that already. But very interesting to see it. And of course, when you look at some of these, when you see some of these emerging market ETFs, down here at the lows, but not a lot of energy over the last few days. And, you can see these things bounce around a little bit. But I'd be watching the futures later tonight and see how we see China and some of these others moving. My guess is that the weakness that we're seeing in this third world basket of stocks problematic. I know that everybody probably looking at the same charts I am in energy, and you see a lot of stuff like USO basically testing its previous high a few days ago. Nice dojis out here. Everything you would like to see. Energy, not a whole lot coming back up to these highs. But I don't really see the indication that this market, at least in energy, is ready to crack. But energy coming back will probably break the market also, especially with this incredibly light volume. And again, what are we? We're almost ready to go to break here. So 220. And what do we have for volume? 1.6 billion shares. This is almost saying, hey, quit pulling my leg, Mr. Market. Moving up 5-6 points on no volume like this sets up the kind of moves that would really open up the downside. And maybe we're different. Maybe volume comes in the next few days. But for me, it looks like we've got a market that could open up probably every day this week, 5 points higher on the S&P and 30 points lower. You've got to be very worried about seeing the kind of light volume we see today, along with earnings like IBM and Google that are soft. Anyway, make sure and give me a call at 877-927-6648. Love to take your phone call if I can actually find any of this stuff around here. Why is it not here? I'll find it. Anyway, give me a call, and we'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, still not a whole lot happening. 1870 on the S&P cash. Certainly no volume. 1.65 billion shares on the consolidated New York Stock Exchange tape. And I'm trying a few things out here. So, in fact, changing or checking my email here real quick. So just give me a second to come back out here and have it all come up. But, see, I'll probably get into a lot of this stuff. And I wonder how much someone had mentioned the Keystone Pipeline deal. And it's kind of trying to figure out exactly where some of these things are coming from. And now that they've delayed it yet another time, the question is, why would you delay this pipeline? There's 12 million miles of pipeline in the United States. I don't really have anybody saying, hey, this pipeline went right through my house, or this pipeline just exploded and had all kinds of noxious chemicals destroy my town. I hear that from trains a lot, but maybe it is just all about money and Buffett's money for trains. Maybe it's all about the what they call the tree hugger side of all this, but just doesn't seem to me that we're doing our country any good by cutting down the amount of exports that we could probably get in at least some of these areas. But maybe that's why we're seeing no real movement today. But I thought it may take a little bit. I had a question in the den, and it's Dustin from Nashville. I think the XLF may have a little tell here is left. Volume is non-existent overall, at least on an intraday basis. Issues with getting positive today. And yeah, not a lot of movement, but that's the entire market here. You could make a nice case that the XLF is setting up an ABC down, especially with this very light volume. When you look at the retracements, it did a 50% retracement. So if you were ready, you could probably pull the trigger on this already. I'm just wondering if this isn't options rollover related, maybe the entire market part on this. And I don't expect that we're probably going to see these energy stocks all blow up at once. I think we're probably going to see a little dip in these things before they start heading down. But none of them really look very good. And I want to thank Dustin for pointing out the extremely light volume in the XLF today. So we'll look at that. But I digress. And I had a few things I wanted to talk about. Oh, I know why I wanted to bring up my email besides Dustin in Nashville. And that was, I had actually a few things that I had in my podcast box that I wanted to talk about. One of those was the Keystone Pipeline, and more of a issue, I think, like they said in the den, with politics than anything else out there, and probably trying to fleece your base or pump it up. But probably the big thing happening in technology in the next couple of days is going to be Arrow, the company that is offering streaming services of basically any television program you can get over the air in your particular area. And that's going before the Supreme Court tomorrow. We're probably going to see some kind of news out of I would imagine between June and July. But what a lot of people are going to be looking at tomorrow is the tone of the questioning by the Supreme Court justices. And maybe that's going to tell us what they're thinking here. If this actually does become settled law and Arrow is able to set up an antenna, basically have a TiVo box at their location and stream it to you anytime they want. The question is whether or not anybody at these cable channels is going to continue paying out the nose and paying the toll to rebroadcast them to their customers. And to me, it's $8 a month for Arrow for most of the places that they're around. Maybe someone in the den can actually tell me what is going to happen. Would they pay $8 a month to get over the air broadcasts? And the difference, of course, would be you could get anywhere you want it. It wouldn't just be at home. You'd now be able to get it at work or anything else. It might be very nice, especially if you wanted to watch the news or something, you were out of town. Anyway, we'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Had a question in the den, and we'll check the email. And, of course, you can give me a call at 877-927-6648. But I think we're probably going to be looking at stocks that are going to be and have earnings out after the bell, and some of the energy stocks. But we do have a question in the den from Jay in J. I guess that's Jay from New Jersey. But he wanted to look at Baidu for a long. And, of course, I'm not thinking long here, but if you were, you're basically kind of trapped at the confluence level for Baidu. And that goes up to 159.26. Tried to break it the first time up and basically reversed that day on April the 2nd. Now that we've had a little bit of trading into this month, and let's go back here and look at the volume just a little bit better here at the same time. You had a high volume low out here at 140.66. With that confluence acting as resistance, you'd probably want this thing to break out and give you a sign of strength, and then come back down to that 160 area to buy it, or wait for the 140 test of April 7th with high volume. I think everybody knows how I feel about high volume lows and them getting tested. I don't think it's anything new, so you're probably looking at a test of that 140 level before I would ever buy it. But maybe different things could come out, especially with the whole push for Alibaba. Their red herring, as they call it, for Alibaba, probably coming out after the bell in the next week or so. And it doesn't mean that they won't be dragging this thing out way into the third quarter. But it looks like they're going to at least give what they call the red herring or the original prospectus out to a few people, and that's probably going to leak. The question is whether or not things are going to change for Baidu. I don't think there's a whole lot there that's going to change for them. Can you buy Baidu as a pin action play for Alibaba? And I just haven't seen a whole lot of correlation so far to that market, but maybe you could see it. But right now, this thing is right at the top of resistance, and you don't have any volume. So I'd say more likely the only place I would buy this would be at 140 with lighter volume. So hopefully that answers Jay's question. Back to looking at energy. And I want to look at OIH here. We've had a few of these stocks start acting like they want to break out in the energy sector. What I dislike today is that we've got the OIH breaking the previous 8.2 million share high with 5.5 million shares so far. Now, maybe this thing gets up to 6.5 or 6.7. But as long as we see very, very light volume in these energy sector ETFs too, I think it's somewhat problematic. Especially if you look at these ETFs on the way back down. You did have some huge energy when these things crested back on the 11th of March. You had 8.8 million shares in this ETF. And you had nice, basically end of an ABC up. If we go to expansions on this, let's see where we can be. Let's make that our A. Let's make that our B, and this our C. So you didn't have, you got a 50% retracement, but basically you have the end of the ABC and 1-to-1. Energy was about the same in both legs, in the A to B and then the C to D legs. But basically we've got the end of our 1-to-1 ABC, and that we didn't have a lot of volume other than sideways volume on Friday. Thursday, energy was kind of flat. And today that we don't get a whole lot, kind of looks to me like we do have the end of some of these ABCs in the energy sector. So I'm going to be watching it close. I haven't put any trades on in energy. I'm going to wait just a little bit longer for some of the other things to come out there. Some of the other stocks that in the energy sector that I think are interesting is maybe some of the plays in uranium. But again, these things are sitting on support levels, but not really getting a lot of love, and certainly not a lot of energy today. Basically we're at a support level in CCJ, and basically you had 4 million shares on January 22nd at $23 and some change. You got below that with 2.9 million shares on March 26th that bounced out of there. You got into it with April 15th. With 2.4 million shares, and it's kind of bounced out of there. But what you don't get get a lot of is any real love on these bounces. And 846,000 shares so far today just doesn't tell me that a lot of people are diving in to some of these alternate energy stocks either. So got to be looking at that. I noticed that all the loser stocks tend to be those third world countries, and just basically not a whole lot being avoided out there. UCO, which is the ProShares Ultra Dow Jones AIG crude oil ETF, another one out here giving us some real heads up in this energy marketplace. That's the March 3rd high on UCO, $36.71, 1.4 million shares. We got into that basically 3 trading days ago on April 16th with 630,000 shares. Of course, just kind of gone sideways since then. And, you probably at least want to wait and react to something out here. I don't think you want to anticipate. Anytime I see a commodity whether it's gold or whether it's oil. I always like to see a short spike to basically take everybody to the cleaners on the short side and then have the thing roll back over. Same thing on gold. One of the reasons why I don't own it, it never really washed everybody out down at the bottom. I would certainly love to see some kind of move in crude to maybe 110, and then I would probably pull the trigger on it. But none of these things look like they've got any I can't even say it, any energy. So we'll be looking at that. Again, you can give me a call at 877-927-6648. I'd love to take your phone call, and we'll hear more about that. Okay. What else do we have out here of interest? There are a few stocks out here making lows, but nothing really exciting. And again, when we've made these lows, you want to see maybe on a day like this when it starts popping, people coming back in. Community Health Systems, nice test of the lows. Basically, you're looking at 3.4 million shares at this $35.11 low on March 25th. We've gone below it. We've closed back above it. And right now, today, we should be seeing people start to flood into these stocks that made nice volume lows. When you don't see that, you really want to be extremely careful in these moves in the stock. In fact, let's check back out here. Okay, 1871 on 1.73 billion shares. So it is problematic to see a market on this light of volume trying to hold these highs. But we'll have to see after earnings tonight. Of course, we are going to see a lot of earnings, and part of that is going to be Netflix and FLX. It was lower by about $4 earlier today. It's kind of reversed that move. In fact, let's see if we let me do this real quick. Okay, and what do we have? It's up 29 cents now. It was down to 338.34 is the low today. It's trading out at 346 now. But, basically a pretty small bounce in some of these. Not a lot of volume, not a lot of people getting out. Of course, you got down to 312.10. It filled that gap, so I'm not expecting this thing, the wheels to fall off all at once. Probably going to consolidate out here for a few more months, and then I figure maybe at that time it's going to be ready to go after some of those gaps down below like we've seen pretty much everywhere else. In fact, calendars, earnings. Oh, I actually have earnings, so I probably ought to pop them up. Earnings. Here we go. Okay. We've got, I don't know if that was out already. Let's take a look. CLF. Let's see if we've got, is that out already today? Take a quick look. Because I have been working on other things. Come on. Come on. I guess it's not out. It doesn't say anything. Anyway, Cliffs Natural CLF off 28 cents right now. Let's take a quick look at this. I think that is after the bell. Maybe someone in the den can tell me. But I see it listed for today. Doesn't really look like it already came out. Looks like it's going to take a run at this $15.41 low out here. Crocs, which I know is almost always after the bell, because I'm a little bit more familiar with that. Kind of been going sideways here for the last 4 or 5 days. And not getting a good indication much on that. Let's see. WYNN, which we'll take a look at. Again, one of these things. A lot of these stocks is kind of hanging on out here. Certainly no volume and win. None of these things. CREE, C-R-E-E. I'm pretty sure that's after the bell today. But let's check out. In fact, CREE, I was doing a little bit of research on them this weekend. Of course, they're in the LED bulb business. And I've been writing about them in the Tech Insider for a while. I thought that this entire business was going to get commoditized, at least somewhat. And I saw bulbs, LED bulbs now, for a little over $7 for 60 watts, and $4.25 for 40-watt bulbs. And these things pull like 9 watts. And now that they're so cheap, I can't really imagine buying an incandescent bulb and using it for whatever, 1,500 hours before it burns out. These things have now gotten cheap enough that I think that it's a wise investment to go to these LED bulbs. When you go to the same Cree bulb at Home Depot this weekend, it was $13 for the 60 water. So almost 50% off, about 40% off for a lot of these new bulbs, at least at IKEA this weekend. I imagine we're probably going to see prices drop in other parts of it, but I'm not really thinking a whole lot about what's going on in this market. Oh, yeah. No one likes those fluorescent bulbs full of mercury. Anyway, this thing could, I'm not short it now. We were short it, but I would love to see, I think what we're going to see is a big move in Cree probably after the bell. So if you're looking for something to play, that is going to be it. ISRG, another one after the bell tonight. This thing, talk about taking you to heaven and hell. They had a huge move up on huge volume. And of course, earnings, basically thing kind of blew apart on news. We've got earnings after the bell tonight. But this thing came right back down to that 450 level. And, we're seeing so many of these. CMG, another one from Friday, we talked about that one, continuing down a little bit today, but just huge price ranges in these stocks, and nothing really catching fire at higher prices other than being able to take a lot of the shorts to the cleaners. Anyway, I hope if anybody has anything they want to look at in the den, certainly can do that, or email me at path@tfnn.com. And if you're really nice, you can give me a call. Got a couple more questions in the den, in the email. Can you do an analysis of the QQQ? Is that unload and start going on? QQQ. So what do we have out here in the Qs? ABC Downs certainly looks like it. Let's take a look at the quick expansion here. You've got what do we have here? What's that? 89. I guess you can look at that way. Let's just do it this way, though. We'll make today's C out here. Yeah, there we go. So it certainly looks to me like we've got a setup here that if we have a lot of stocks failing, we're really got a nice wind up out here. You don't want to see this light volume going into that decent bar down from the 10th on the Qs. And of course, you don't want it on this huge volume day down from the 4th that had 131 million shares. We've got, if this is right, 20 million shares on the Qs. Be scared. Be very afraid, children. Be very afraid. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, I think there was one more question in the email here when we're looking at it, and that is looking at Maxwell Technologies. Not a real sign of strength out here for Maxwell. It is up testing the highs. Again, a lot of rumors floating around, not just in this stock, but just about every stock out there. All kinds of buyout rumors and other BS. When you're at highs with very light volume, pretty easy to move a market on that. And, of course, on Maxwell today, it is another story that may or may not be true, but these guys have been talking this up since back in the late February, and that is Tesla will be using their supercapacitors in their cars. There's nothing really to back that up, nothing from either Tesla or Maxwell. But a lot of people short the stock, and it's easy to come back and say boo every once in a while and move it, especially on light days. But you don't like the fact this thing is higher than the March 5th high that had 6.7 million shares, and you have a very light volume out here. Maybe they will come out with some news. Maybe this will be the product that everybody's been waiting for. But so far, a lot of smoke and mirrors as far as I can tell. And I would watch it very closely. I would rather wait this and see this thing break out with volume and then pull back to 16 to buy it there than own it. In fact, if I owned it right now, you'd have to, I'd be crawling through broken glass to click the sell button right now. So keep an eye on it. Anyway, we're looking at other stocks out here after the bell. And, a lot of the standard stuff. Oh, VMware. VM. Yeah, take a quick look at this. I don't think they had out there anything else. But we'll take a quick look. VMW. Take a quick look at it. It says it's going to invest $500 million in India. Upgraded Outperform. I don't see earnings. Anything else out here? So earnings still probably after the bell tonight on this one, but up a little bit. But again, not a lot of volume, and of course, doing a little bit of that B2C leg in a lot of these stocks. Take a quick look at this. How far is this thing retraced? If this is the C, basically you got 43% now. You're into this high volume day down. This is where the whole problem comes with all these stocks, is that you had high volume moves and energy moves down in them, and now we're coming back up in earnings. And this is kind of just a lot of little short squeezes out here. But this one would be another easy one to watch after the bell if you're going to do some after hours trading. Probably the big problem is just the total lack of volume out here. I don't know if it's going to get any better after earnings, but we'll have to keep an eye on it. But yeah, we're still up 6.5 points on the S&P cash. 1.8 billion shares, so volume hasn't gotten any better in the last part of this show. Keep an eye out, because this market can, especially when you have light volume moves like this into earnings, you get disappointments. You can have some major down moves in this market. So just remember, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.